Yeah, that's right. You guys are talking about the markets being volatile. I'll tell you what's been doing well, the metal index. So let's go across to the big wall and tell you more about that. So the metal index, in the last couple of months or so, the Nifty is more or less unmoved, but the metal index is up close to around 15%. Big outperformance out there. The China unlock is playing out, and there's a double bazooka that's playing out there. One is the Chinese economy is unlocking, so obviously a more amount of steel, more amount of metal is used. And the second factor is the domestic steel market was plagued because there was an export duty that was levied. That got pulled off in November itself. So good couple of tailwinds did come in for the industry. Let's run you through 5 big points that have been helping the steel industry in particular. The Chinese push. Well, there were 2 factors out there that was ailing the Chinese market. One was the property market. The second factor was there was no mobilization. People were stuck at home. Now, both of them are being addressed. So the Chinese government and the Chinese authorities are focusing on this. So good news out there. Second factor is the Chinese steel prices. Remember the HRC prices? Well, they corrected from around $860 at the start of 2022 all the way to around $500 odd. But with this unlock theme playing out, well, the pricing is currently at around $620, $630 per ton. So that's giving you a case that domestic prices will get some kind of support. Moving to the domestic prices itself. In India, well, the steel prices were at a premium in comparison to Chinese steel prices. That is, if you import steel from China, well, it was coming at a cheaper rate. Well, that's quickly turned around because from an 8,000 rupee premium, the Indian steel makers, they went ahead and they cut prices, while the Chinese players, they increased prices. Suddenly, the entire ratio has flipped around, and now you have the Chinese steel, if you import it, it's coming at a premium in comparison to domestic steel prices. A couple of brokerages like JP Morgan as well as BofA ML, they are expecting price increases of 2,000 to 3,000 in the next few months. Next up, iron ore prices. They've been on a tear, up close to around 50% from the lows that we recently saw. Remember, if iron ore prices move up, it gives a bit of a base for steel companies as well, and it's advantage India because India gets most of the fairest guys. They get most of their iron ore from domestic sources. Domestic iron ore is at a discount in comparison to imported iron ore that comes in there. And also keep in mind that if iron ore prices move up, then steel prices, they get a base, and in that context, India is relatively better placed. Finally, demand. Demand's been good. That price increase that's been taken at the start of January, it's been lapped up by consumers. So good news out there. Restocking is taking place. First, the consumers were saying, no, let's not buy, steel prices will fall. Now they're loading up yet again. And also, in the coming quarter, you'll have export volumes that will pick up. Finally, steel and metals is not really about valuations, but we need to focus on that. It's more about momentum investing. And that's why we've seen these stocks run up. But more or less, on a price to book value, it's pretty much in line with what they've been trading at. So that's about the metal and the ferrous space. But guys, Sonia, everyone doesn't track steel, right? People want to look at gold. Suddenly, that's making a comeback. Tell us more about that. You've been tracking that space. And in fact, history suggests that gold's been a decent performer as well.
I hope you guys have bought some gold
I
for yourselves, for your